We're looking at the 9-day look for the gold chart. And this is a swing line, which means it finds the highs and lows for each area. And the blue lines represent a short-term Fibonacci representing the last 50 periods, or 450 days. And then you have the next one, which does 200 periods, or 1800 days. And I have a few things within the five significant things. But before we go there, this market was never really bullish until it got by this significant level in here. So the breakout occurred in 2003 within the red line. So it was in a downtrend for quite some time, and well, the high was 1980, and the previous high was somewhere in the area of here. So the market had retraced just a little bit. On a logarithmic view, what you would end up seeing is a very slow retracement, continuing on within here, and a very slow rally that picked up a little bit in here, and well, showing signs that it might want to pick up again. When you look at the big move, it's just burst to the upside, sort of like it did here. It burst, and notice that when this one had a short consolidation, and within the 9 days, short consolidation can be 2-3 months maybe, or 2 months anyway. It has a nice big move up to here, and then boom, we have this little crash. We'll get back into that in just a little bit. But we're having that nice little move, and I'm going to go through these 5 different variables now. First, gold broke free in 2003. Well, I've already talked about why it did that. It was just basically in here. You can see how we're breaking support here, and boom, it was in a downtrend. That's when the bullish started. 2, gold broke the end of 2002 on the short Fibonacci, which is the blue line. And in here, it's bearish for the entire part. This is neutral. You see it go sideways. Okay, so we're going from bearish to neutral. And wait a second here. There's support, and there's your lift off. Okay. That must mean that it was going bullish, or at least trying to, and it obviously did. Number 3. The long Fibonacci has 0 tests on either fib level. The red line is the long one. And it broke free in here. That's not a test. That's trying to go bullish. And it did. But once it says, yes, I'm going bullish, then boom, there we go. So the only test it would have had is you break it for the first time, and you're getting that very first little bit resistance breakout point, which normally is not the only hit, even if it does break out like this. So this one has never been touched, and currently it's up towards 1100, and of course it will keep going higher as gold makes new highs, and even if time evaporates, basically. Which means in so many months or quarters that the lower levels that are the lows would become bigger, thus they naturally go higher. And within the short Fibonacci, it's only had 161.8 test, which is the bottom of the blue bands. Since it really broke in here, it never touched it until here. It went below it, and that's a successful support hit. And since then, that's the only time. Now, I counted 9 on the upper band, which I'm not going to go over them, but that means it's been there 9 times, and it's won 8 of them, because this one really wasn't a win. It did have a small bounce, but that doesn't count because boom, it went lower. And that tells you we're in a strong market. Now, obviously, there's the inflationary factors, which is the big reasons to be getting in. But at this point, there's no reason to state that it is slowing down. Now, what I want to focus on now is trend line analysis. Notice what happens to the market when this trend line breaks. It gets very volatile as it's having a test that it didn't have for quite some time. And as it broke free, the volatility in here became greater than what we've seen in here, and that's still the case. So now that we've broken that trend line, well, what's the next level? Because obviously support is nowhere near, however you draw this line, it's way off. Therefore, yeah, we're like there on a logarithmic view anyway. And a lot, excuse me, a lot of volatility will naturally come in only because a lot of people see in the linear charts will think, oh man, this thing's exploding, and it is exploding, but it still does have a very little to do to get above this trend line. And what that means is when you have the breaks, you naturally have bigger up and bigger down moves. We're in the primary uptrend right now. And for a market to roll over, we want to see the opposite of what we see in here. We need to see these red lines start to flatten out and start to go, that type of stuff, where they get tested more often. Because the odds do favor if we have a bounce to this whenever it happens. It's one of those whenever deals. There's been a few times I talk about, well, at some point we have to have a correction, and it can take forever, or so it seems a lot of the times, and this is one of them. And how much longer it's going to take, I have no idea. It could hit 2,500 when it finally hits it, or it could hit it here at 13 or 15. I have no idea, but odds do favor that at some point when it does go there, that it's going to bounce no matter what that level happens to be. Okay. So that should pretty much summarize most of this, but a break above here, a lot of times you're going to notice that it can very easily coincide with the news that just happens to occur. Before, the debt ceiling was a very popular subject, and there's going to be more debt issues because perpetual debt means that it just keeps going on and on until finally it pretty much explodes. Anyway, take care. And no, it's not quite over yet, but I wrote this down so I wouldn't forget what I really wanted to put on, and this was one of them, and I was trying to think at the end of the video, what is it that I want to say? Yeah, what is it that I want to say? And I know now, which is kind of interesting. Because I was talking before about, okay, we're back to like comparing this within this, or really even this one in here. Because what I did earlier is I basically put this copied and pasted this onto here. And it's interesting how Fibonacci works, and just seeing this now for the first time, I'm thinking we're going to do this as well, because we've seen these big moves before. So what I will do is copy and paste in here, because this is something that could happen on any type of chart. Whether it does, I don't know. But I did say the explosion pretty much ready to occur. Now, if you put it something like this, it's so easy to make fit within this Fibonacci series. But if something like this were to occur, where is the bearishness? This thing could go down to like 1,300 long term, and there's no signs at all of this thing going bearish. For if this were the chart, I would be saying, well, it's slowing down a little bit, but I like how we got this move now and how we're breaking from this line in here, all that type of stuff. And the one that I will do now, which I haven't done, is this one in here. What would a market look like if it did something like this? Well, you can see the lower Fibonacci doesn't quite fit in, but you'd be looking at the exact same sort of deal. So these moves have happened before. And whenever you see any large sell-off on gold, silver, palladium, platinum, ask yourself, is this going to be legit? Should we believe consumer confidence numbers doing this is going to really degrade the gold trade? Or should I have believed the story at the start of May when they said Osama died, which is the reason why silver went down over 10%? Few questions that you may want to decide to ask yourself, because a lot of these types of games and within the derivative markets just really have to play, because The old saying about, oh, when it goes down, it's all manipulated. It's been manipulated during this entire run. And until something's done about it, it's going to continue to be that way. So with the paper derivatives, doing all these things, and margin calls, any of that fancy financial mumbo jumbo, they can make the moves happen however it happens to be. How it has been is what you see so far. And that's why I think it's a little important. And it's interesting because now I wanted to say something else and I forgot it. Yeah, wow. Well, the uh, the market's still looking pretty good. Anyway, take care.